Evening, everybody. Thank you so much for joining us this evening. We got a great response to the last seminar, and that's why we have followed up with this one. And we hope that you can make the most out of this session, and it is relevant and a very complex topic. Please add your questions to the chat, and we will address them during the Q&A session at the end. To give you an overview of this program, in the first 20 minutes, I'll be talking about 5 tax mistakes to avoid when selling Indian properties. Finally, we will have around 10 minutes for Q&A. At the outset, we have a disclaimer. This presentation should not be considered as tax advice. Please consult your tax agents, lawyers before proceeding further. We're sharing this information for everybody's benefit. I want to start off by giving you a bit of context about how Nobilis NRI taxation was formed way back in 2015. It started off with my own experience of trying to transfer funds. In spite of being a chartered accountant and a CPA with an international taxation background, I struggled to navigate through the maze of different tax rules here in India to repatriate funds. Needless to say, it was a stressful experience, too complex, with no set process, no set standards. Indian CAs don't understand American tax rules, and US accountants don't get the Indian tax rules. I realized I had the skills and expertise to help others in a similar position. And 7 years later, here we are. I could not have done all this without tireless efforts of my amazing team in Bangalore. Thank you for all your efforts, especially Mangla. To start off, for the following slides, I'll be describing in detail the 5 tax mistakes to avoid while selling Indian properties and repatriating the funds to US. As you may see, the ultimate objective is to bring funds from India to American bank account after selling the Indian property. How do we do it? We have a few hurdles to cross before reaching that happy moment of having funds in your American bank account. Should you disclose Indian property sale in the US tax return? This is an important question to all of you. This is a common mistake that people make and get into trouble with IRS. There is a data matching program between PAN number and the TIN, and the automatic exchange of information system between India and US through the G20 summit agreement. As an American taxpayer, you should disclose an Indian sale of property in the US tax return. Under the US tax rules, you are required to disclose your global income in the US tax return. It's also wrong to assume that if we don't bring the funds to the US, then we don't have to disclose it in the US tax return. You need to disclose everything in the US tax return. We can assist you with our customized tax minimization strategy by which 60 to 80% of our clients not end up paying any taxes in the US for the property sale. But these property sales needs to be disclosed correctly. The financial year in India and US, the overlapping months. What I mean by overlapping months? The financial year in India is 1st of April to 31st of March. And financial year generally in US is 1st of January to 31st of December. Let us take an example that you have sold a property in the month of December. So you need to disclose this sale immediately when you're lodging your tax return in the month of April. However, from India point of view, and you can lodge your tax returns only in the month of May or June. So what happens if you have a refund situation? So you might have to wait for some time, or while you're lodging the tax returns in US, claiming the dual tax exemptions becomes really critical because you haven't lodged your Indian tax return before lodging the US tax returns. So according to me, over the period of our experience with helping other clients, the best time to sell is January and Feb. You get 1 month or 2 months time to repatriate the funds before end of March, and we will lodge your tax returns in the month of May or June, and you get a sufficient time to disclose this transaction in the US tax return. The second best time could be June and July. Not doing US tax planning before the sale. The planning of US tax return beforehand will help you to minimize the overall tax liability, both in India and the US put together. Just to give an example, that investing in your deposits like rural electrification bonds or any other bonds which does not attract capital gain tax in India. And this option may be suggested to you by a chartered accountant in India who may not be fully aware of the US tax rules. This tax exemption is not recognized in the US, and you will have to disclose it in the US tax return. In our tax advice report, we consider your tax liability cash flow requirements to suggest 4 different options for you to choose from to minimize the overall tax. We also consider visa conditions and rules, date of green card, and date of purchase to apply tax minimization strategies. Lower withholding of taxes. There is a TDS of 20% on sale price. Lower withholding of taxes improves your chance of getting funds faster. If you have already given a deposits to the US property, required funds immediately, this is helpful. Usually it takes around 6 to 8 weeks to do this. And this is a good idea to get in touch with us well in advance of your planned sale. Just to clarify this part in detail, when you sell your property, let us take for 1 crore rupees. So the withholding of taxes is on 20% of 1 crore rupees, that is 20 lakhs rupees. Whether you make a gain or loss, this still the 20% is applicable. So the only way we can avoid this is by applying for lower withholding of taxes. NRO account, PAN, KYC to transfer funds to the US. These are basic documentations needed, and the funds get stuck in India because of something simple like not having NRO account. There is a 5% withholding tax applicable for savings bank account. So you need to have an NRO bank account. NRE is not that mandatory unless you have deposited the funds from an NRE account. PAN card, make sure that you have updated the address and everything from the income tax point of view. KYC with the banks. So most of the time, funds get stuck in the Indian banks for not having KYC. KYC stands for Know Your Customer Documentations with your banks. The previous income tax returns here in India, make sure that you have lodged your previous tax returns properly. And if it is below threshold limit, probably you may not be required to lodge your tax return, but it is good to verify whether you need to lodge your tax return before the planned sale. If the property is purchased while you are in India or purchased out of a rupee fund, then the NRO account becomes mandatory. So how much can you repatriate the funds? In the most cases, funds are deposited into NRO account. You can repatriate up to 1 million USD. So there are some informations in the internet about $250,000. That $250,000 are applicable for resident Indians, not for non-resident Indians. To repatriate the funds to US, you need a chartered accountant certificate, which is called 15CA, 15CB. There is a simple process to issue a 15CA, 15CB. In simple terms, the funds sitting in your NRO accounts, good to leave Indian borders, and it has already suffered a tax in India. So that is a simple explanations for the chartered accountant's certificate. Once the sale proceeds are transferred to the NRO account, we verify the transactions with the documentary evidences which you produce, and we will issue you a 15CB certificate. And there is a form A2 given by the bankers, and we upload all these forms, 15CA, 15CB, as well as A2 to tax office, as well as give a copy to the bankers. Banker will verify all these transactions along with our certificate, and they'll transfer the funds to your NRO account or your US account, whatever you want to be. Finally, the NRE funds are freely repatriated. So there is no restriction as such. At last, the happy moment is here. Your funds have landed in your US bank account. Now you're free to invest it in any way you wish. We have network within our client base who are looking to buy Indian properties. And if you are looking for a buyer for your Indian property, we can certainly assist you with that. Alternatively, if you have already found a buyer, we can help you to sell and repatriate the process. Best to reach out to us at least 6 weeks before the sale. All our partners have a good understanding of the requirements of US tax residents selling properties in India, and you will be in safe hands. Our vision is to offer one-stop solution to sell your Indian properties and bring funds here in US, build your real estate investment portfolio in the US. We offer peace of mind with a lot of handholding from our Indian team and value for service. This will reduce uncertainties in the process, and your funds are definitely going to come to US bank account. I will take your questions now. Please add them in the chat box. Thank you.